Hello everybody, welcome back to the Mind Your Money YouTube channel. My name is Tasha, and if this is your very first time coming to the channel, hello and welcome. Thank you so much for clicking on that thumbnail. I hope that you would stick around a while, because today I'm going to be talking about why my husband and I have 20 bank accounts and how we use them. So I just want to give a little introduction about myself in case you're new here or you've just come for the very first time. I am a wife to a wonderful husband, a mother to 3 amazing boys. I am an insurance agent from 9 to 5, and we started this channel so that we can budget, we can document our debt-free journey, we can document our financial independence journey, and we are building generational wealth. So there is a whole lot going on, but we're starting with budgeting and managing our money. And today I'm going to be sharing with you how we use these separate 20 accounts and what they are. So I'm going to turn the camera around and I'm going to give you a visual view of all of the accounts we have with simple, quick explanations for each and every one of them. Okay, so this video is all about my 20 bank accounts. Ta-da! So I know a couple of people have asked me in the comments on my previous videos, I think specifically the savings challenge that I started in September, asked to hear about our 19 bank accounts. What I had forgotten is that I had opened an account with One United Bank, and I just opened it because I wanted to support a Black-owned bank, and I completely forgot that I had it. So our total amount of bank accounts are 20, and I broke them down into different sections so I can explain to you simply and quickly how we use them and why they are good for us. So we're going to start with checking accounts. Now these 3 checking accounts are joint accounts, and they are basically for everything concerning our household. So starting with the first one, which is called general, I use this as a general household account because we are able to transfer income that comes here is transferred into our savings accounts, which are sinking funds. So this is a very important account, and this account is with a bank that does not require a minimum balance, so we're able to transfer down to the last penny. Even if there's $0 in the account will stay open, but it rarely has $0 inside. Okay, the second one is our tithing account, and this tithing account is in a bank that also is a checking account that does not have a minimum balance, and we only use this basically to do our giving. Nothing else goes into this account or comes out of this account except for our tithe and our offering. And then also the third is the household account, and that's a joint account with a bank that does require a minimum balance. However, everything that we earn, whether it's direct deposit or our physical checks, go into this account, and then they're divvied up between different accounts for their individual purposes. Now these are used to give transfer to savings and to pay bills, and they're all joint accounts. The next set we have are 3 spending accounts, which is one is with Chime Bank, Discover, and then again, as I mentioned in the very beginning of the video, One United. And these are used for personal spending. They're ideal for purchasing gifts or self-care. And the reason why it's good to have separate accounts for that is because if you are married, you have a spouse, you have a significant other, it's important that if you want to keep certain surprises, you don't want to buy a gift and then they check the account and you realize, oh, I know what you bought me for my birthday or for Christmas. So that is the reason why these are separate from this section here. And all growing up, I learned that we should not put all of our eggs in one basket. So having accounts with different banks lessens the risk of something happen and we losing a lot of our money. So we put money in separate accounts with separate banks so that if something happens with one bank, we can easily withdraw that money and move it over to another bank until we decide how we're going to shift gears. I hope that makes sense. All right, now on to our savings. First set of savings accounts are 6 sinking funds, and that will be clothing, Christmas, vehicle maintenance, medical, vehicle insurance, and renter's insurance. And these can be added to, we could increase, because more will be added or replaced as we have different goals. So we could be saving up later on for anniversaries or maybe our home, things like that. So we can always add sinking funds or we can replace them at any time. And all of these accounts are with one bank that they are all high yield savings accounts, and each of them has a specific purpose, which is why we have titled them exactly what they are for clothing, and that's for everyone in the house. Christmas, that's, you know, pretty obvious. Vehicle maintenance, that's everything from oil changes to tire rotation. Medical is exactly for that, anything related to our medical or health needs. Vehicle insurance, and that's so we can pay our car insurance in full every 6 months. Renters insurance is so that we can pay our renters insurance in full every year. And of course, when we buy our home, this could be replaced to, let's say, taxes or escrow, so that we can make sure that we're keeping up with our insurance, stuff like that, house repairs, etc. Now, these next 3 savings accounts are for challenges only, and that could be like the 52-week challenge. We also have a spare change challenge. We started a $10,000 savings challenge in April this year. Although this is paused, we still have the account with the funds in it, so we can start over again once we pay off our student loans. Now, if you haven't already, please like this video, please subscribe, and thank you for continuing to watch. I appreciate you. All right, so Ally is actually the name of the bank where we have a savings accounts that we divvy up into different buckets, and these are used to encourage short-term savings goals. Then we have our high yield interest emergency fund. Now, this savings account is one we do not touch. We only use this for in extreme emergencies. Thankfully, we have not yet had to use this, and we have a large balance here that is growing interest, and that is a separate account from our sinking funds, so there's no temptation to transfer money from here to there. All right. Now, our savings accounts that we have here are digital envelopes, and they're comparable to cash envelopes that many people use on their journeys, because it's easier to use cash than it is to have their monies in accounts where they can just swipe their card. So I use these savings accounts, and again, these are high yield savings accounts that build interest. First, the monies in this account are revolving, so we use these accounts for regular purchases or unbudgeted purchases. So if we didn't budget for something and it came up during the month, we can use money from the miscellaneous account, transfer that to a checking account, which is why we have this general account here with the same bank. So that way we can make purchases when we're looking to buy household supplies like toothpaste or toilet paper. We can use this here. Or if there was something miscellaneous or unbudgeted that came up, we can use money from these accounts or these envelopes to make those payments. And I track these on paper, and I also track them digitally in Excel. Now, these last 2 savings accounts are what I call don't see, don't touch accounts. And they're online savings accounts, HSBC and Markets by Goldman Sachs. So we started with a $300 balance, and we just don't touch them. So HSBC, COVID season, had a 2.2% APY. I think now it's down to 0.8 or 0.65. But it's still a really good interest rate. And because we haven't put any money in, and we haven't taken any money out. And the only time I review these is every quarter when I get a statement, just to see how much interest has been earned. So these are our don't see, don't touch accounts. They're just there to be there. I guess they could be considered as 2 mini emergency funds. But I was really attracted by their interest rate, and the fact that even though HSBC has brick and mortar locations, I opened this online and there's no debit card attached to this account or linked to this account. So I cannot just pull money out easily. And it's good not to see them sometimes, because every 3 months when I get a statement, I look at it and I say, oh wow, I had money in here and didn't realize it. So that in a nutshell is my 20 bank accounts. I hope you guys enjoyed this video enough to give me a big thumbs up, and I hope you come back again. So click subscribe and click that notification bell, so when you'll be notified when I have a new video up. Thank you guys so much for watching today's video. I really appreciate you giving me your attention and time today. Bye-bye. Remember to mind your money, manage it well, and live life to the fullest. Bye, guys.